Today, we're diving deep into the world of Sofi Technologies, Inc., a company that's been making waves in the fintech ocean. We'll explore its financial metrics, recent stock performance, insider activities, and why investors should keep their cool. So, grab your favorite beverage, sit back, and let's embark on this financial adventure. Imagine you're on a road trip, and your GPS shows both your current speed and your average speed over the trip. Similarly, moving averages help investors understand a stock's performance over time. SoFi's 50-day moving average is $14.83, while its 200-day moving average is $12.92. These figures suggest that, in the short term, SoFi's stock has been performing better than its longer-term average, indicating positive momentum. It's like when you finally find the gas pedal after miles of coasting. Liquidity ratios, the company's financial hydration level. Think of liquidity ratios as a company's hydration level. The current ratio measures a company's ability to cover its short-term liabilities with short-term assets. SoFi's current ratio is 1.19, meaning it has $1.19 in current assets for every $1 in current liabilities. Not too shabby. The quick ratio, which excludes inventory, stands at 0.18. This might seem low, but in the financial services industry, where inventory isn't a significant factor, it's not necessarily alarming. It's like carrying a small water bottle because there's a refreshment stand at every corner. Debt-to-equity ratio, balancing the financial seesaw. SoFi's debt-to-equity ratio is 49.11%, indicating that for every dollar of equity, there's approximately 49 cents of debt. This is relatively moderate and suggests that the company isn't overly reliant on debt financing. Imagine a seesaw where both sides are nearly balanced. No one wants to be catapulted into the air unexpectedly. Market cap, PE, PEG, and beta, the stock's vital signs. SoFi boasts a market cap of $13.26 billion, reflecting its total market value. The price-to-earnings, PE, ratio is 31.64, indicating that investors are willing to pay $31.64 for every dollar of earnings. The price/earnings to growth, PEG, ratio is 2.24, which factors in expected earnings growth, and a beta of 1.79 suggests the stock is more volatile than the market. In layman's terms, SoFi is like that friend who's the life of the party, exciting but sometimes unpredictable. Recent stock performance, a temporary dip. Recently, SoFi shares experienced a 3.9% dip, trading as low as $11.82. Approximately 9,694,095 shares changed hands during mid-trading day, a 78% decline from the average daily volume of 44,508,599 shares. Before you hit the panic button, remember that stock markets are like roller coasters, full of ups and downs. A single day's performance doesn't define the company's long-term trajectory. SoFi's future, why $175 per share, isn't crazy talk. All right, now that we've covered SoFi's fundamentals, let's get to the real juicy part, where this rocket ship is heading. You might be wondering, $175 per share? That's ridiculous. But is it? Let's break it down in a way that even your financially clueless cousin at Thanksgiving would understand. By the way, if you are benefiting from the content so far and want more like this, hit the subscribe button, turn on the notifications bell, and comment the word more. Just go ahead and type the word more so I know. Now that you've commented, let's continue. But wait, a bad stock will not do anything except ruin your portfolio. That's why in Super Wealth Builders, you will learn the specific investing principle for long-term investors who want to make millions. Now, dollar cost averaging principle of investing is easy. But the harder part is finding great companies to invest in, which is why you need to join us in Super Wealth Builders team. Find the link in description if you are interested in building long-lasting wealth even for your children's children. Thank you. SoFi is following the classic build first, profit later playbook, much like Amazon did in its early days. Remember when Amazon was just an online bookstore bleeding money? Now, Jeff Bezos is launching rockets for fun. SoFi has already achieved GAAP profitability, which is a huge milestone. The next step? Expanding its margins and reinvesting in high-growth areas like deposits and lending. SoFi's banking charter allows it to fund loans at ultra-low costs, thanks to direct deposits. Technology platform, Galileo and Technicis, their financial infrastructure arm, is the picks and shovels play for the digital banking gold rush. Investment products, SoFi Invest is growing rapidly, potentially turning into a fintech-powered brokerage titan. The more customers use SoFi, the more money SoFi makes. The more money SoFi makes, the more customers it attracts. This cycle, a flywheel, as Bezos would call it, is what builds trillion-dollar companies. SoFi's valuation is still in startup mode, despite being a profitable, high-growth business. If investors wake up and realize this, we could see a serious re-rating upwards. Target: if SoFi gets revalued to a high-growth fintech multiple, like PayPal in its prime, a $175 share price is possible. SoFi's secret weapon: a potential sovereign wealth fund boost? Alright, here's where things get really interesting. There's been speculation that if Donald Trump wins the 2024 election, he might push for a U.S. sovereign wealth fund, a massive government-backed investment vehicle that could supercharge industries like fintech. Why does this matter for SoFi? Government-backed capital could accelerate SoFi's expansion into new markets. Potential partnerships with federal programs could make SoFi a preferred fintech provider. A sovereign fund could drive a massive influx of investment into companies positioned as next-gen financial leaders. If the U.S. government suddenly decides to get into the investing game, SoFi would be one of the biggest beneficiaries due to its unique position in digital banking, AI-driven lending, and financial infrastructure. It's our privilege that God, the creator of heaven and earth, will bless us abundantly, make us the head and not the tail if we love him and obey his commandments. Please acknowledge him in your plans, and he will direct your paths. Proverbs 3 verses 5-6. Want more information? Please check the description section. Also, again, if you are interested in learning how to find great companies and build lasting wealth, consider becoming a member. Link in the description section. If you have watched until the end, drop a comment like this: I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. There are 3 more important steps to build wealth. First, like this video, subscribe, and then turn on the notifications bell. If you do this, you highly motivate me to continue bringing to you educative and transformative videos every week. Do not miss out on our future videos full of knowledge and wisdom. All I am asking is your subscription. Thanks for joining us today. Your support is appreciated so much. Do not hesitate to share this video to help someone. I recommend that you watch the next video, subscribe to the channel, and share your thoughts about today's video. Thank you. See you in the next video by God's grace. We love you, and blessings to you.